one. You know, in Spotlight, this is where we dissect trending stories of the day. Stories relating from governance, health, education, security, business, and other well-informed and intelligent stories of the day. Well, today on Spotlight, we'll go straight to the request by the president for $21.5 billion dollars loan and also 758 billion naira pension fund. My name is Michael Inyang. Welcome to the show. The National Assembly has received a formal request from President Bola Tinubu seeking approval for a $21.5 billion external loan and a $758 billion domestic bond to settle outstanding pension liabilities. In all of this, the request is aimed at financing critical projects, like they say, like the president said, it's aimed at financing critical projects across various sectors of the economy, particularly infrastructure, health, education, and even water supply. In all of this, this was being read at the Senate plenary yesterday. Well, I will also listen to the Senate plenary to hear more on all of this. But joining us live to discuss this budget, to discuss this request, is a member of the Nigerian Stock Exchange and the managing director of ASS Management, Olatunde Amolegbe. Good morning, Mr. Olatunde.
Good morning, Michael. It's my pleasure to be here.
Yeah, welcome to the show. How are you doing this morning?
I'm okay. How are you doing?
Well, we're fine. We thank God for life. Well, let's go ahead in this conversation right yeah. But how do we even explain this request to the average man? The proposed bond insurance amount of 757.9 billion naira, a request of $21.5 billion external loan. How do we explain, how do you explain this to the average Nigerian in the simple term?
Yes. Well, thank you for having me. To explain this in simple term, every year the government releases a budget. Now, the budget highlights, the spending the government intends to carry on and how it intends to finance those budgets. Now, the budget for 2025 has a deficit of about 13 trillion, I believe. What that deficit means is that the total budget itself, that the government had released, the revenue the government is going to be taking in from various sources, like taxes and tariffs and all of that, is not going to cover the entire spending they intend to carry on. So there's a deficit of about 13 trillion, which needs to be covered. So essentially, it's like you intend to spend 20,000 naira, but really from your income, you're only going to be bringing in 15 million. We're only going to be bringing in 15,000.
Okay.
The balance of 5,000 will need to come from somewhere. So the balance of 13 trillion or thereabouts to cover the deficit will need to come from somewhere, and most times, those provision comes in the form of borrowings and loans and the likes.
Wow.
And this is what we're seeing now. So, and the law of the nation requires that the government, the federal government, the assembly has approved that yes, there's going to be a deficit of 13 trillion that needs to be covered. In borrowing to cover that deficit, those borrowings needs to be approved by the National Assembly, which is the reason why the government, the federal government, has now made this application to say, we need to borrow this amount in order to be able to, continue to cover that 13 trillion deficit that we have. So really, this I will argue is expected, because that deficit has been there. Everybody knows it. And everybody knows that those deficits could actually either be covered by increase in revenue, sale of assets, or borrowing. In this case, the government, have chosen to borrow in order to cover the deficit. So that in a nutshell is the reason why we're here.
Well, I said the government has chosen to borrow, but in a time where a lot of people are even rejoicing that wow, so we could pay off the IMF loan. Now this is coming like a shock to Nigeria. Let's listen to the Senate president on this borrowing, and then we'll come back and talk more.
So, distinguished colleagues, I'll take this again. We are looking at requests for approval of the federal government 2025 to 2026 external borrowing rolling plan in the total facility and projects and programs under the borrowing plan of $21.5 billion and Japanese yen 15 billion and grant of 65 million euros respectively, and the summary of the breakdown is attached herewith. The Senate, in the light of the removal of the fuel subsidy and its impact on the national economy, approval is sought for the external borrowing plan. I want to emphasize that the projects and programs included in the borrowing plan were selected based on thorough technical and economic evaluations, as well as their anticipated contributions to the socio-economic development of the country. These initiatives aim to generate employment, promote skill acquisition, foster entrepreneurship, reduce poverty, and enhance food security, all of which will improve the livelihoods of the average Nigerian. The majority of these projects and programs will be implemented across all the 36 states of the Federation and the Federal Capital Territory. In light of the significant infrastructure deficit in the country and the vast financial resources needed to address this gap amid declining domestic funding, it has become essential to pursue prudent external borrowing to close the financial shortfall. These funds will primarily be directed towards critical infrastructure projects, including sectors of power, railways, healthcare, amongst others. Given the urgent nature of these needs and the importance of stabilizing the economy, it is crucial to seek the consideration and approval of the distinguished Senate for the 2025 to 2026 external borrowing plan. This will enable the government to fulfill its obligations to the Nigerian people through timely disbursements and effective project implementation.
And that's the voice of the Senate President Godswill Akpabio at the House yesterday during a plenary where they read the request of the President to requesting for a sum of $21.1 billion and also Japanese yuan of 15 billion yen, also 758 billion naira pension. All of this right here. We'll also have a member of the Nigerian Stock Exchange here and also a managing director of the ASS Management. Mr. Olatunde, as it is right now, can you hear me?
Yes, I'm with you.
All right. Some will argue that President Tinubu's request to raise this $2 billion from the domestic market is a strong move to boost Nigeria's economy. He's ready out there talking about employment, skill acquisition, reduce poverty, also promote security, power, healthcare, railway, and all of this. Some will argue, it's to domestic market is a strong move to boost Nigeria's economy using local resources by focusing on local funding. Do you agree with this analogy, or you have your own opinion or argument that probably they could go more, do a local funding?
Mm-hmm. Okay, thank you very much. Very good question. See, um, doing domestic foreign currency borrowing
Okay.
has its clear advantages, and I will tell you a few of the advantages. Number one, it though the cost relative to borrowing from multilateral organizations such as IMF and the World Bank and the likes, the cost could be relatively higher, but it does not typically come with some of the other APROM strings that borrowing from multilateral organizations actually entails. You borrow from the World Bank and the IMF, and besides giving you the money, they're asking you to carry out some structural adjustments and the likes. And you and I know that carrying out some of these structural adjustments sometimes come with a lot of pain, particularly to the citizenry. So if a government has the capacity, or if an economy have the capacity to actually lend to governments in foreign currency, it's that provides a very good advantage.
Okay.
The second advantage, of course, is the fact that the liquidity now stays within the economy, because borrowing is done locally. It means that interest that is going to be paid will also be paid to local investors. So the liquidity remains within the economy of Nigeria, as different from the liquidity going offshore. So that's a second advantage. The third advantage, of course, is what has been mentioned, which is the deepening of the Nigerian capital market. It's clear that we need to do everything we can to continue to deepen the capital market in Nigeria. The market has shown in the last, I will argue, 4 or 5 years, that it has significant absorptive capacity. I'm sure that until the first US dollar domestic bond was issued, I believe last year, nobody ever thought that Nigeria has the capacity to be able to raise that sort of amount in US dollars locally, domestically. And we had a situation where when the issuance was done, the offer was actually like 4 or 5 times oversubscribed, which means that the capacity to actually borrow the money locally exists, which I will assume that over time will reduce our need to actually approach.
Sorry to come in here. Talking about capital market, is there a difference between money market and the capital market?
Oh, absolutely. Money. When you are talking about money markets, you are focused on the banks, and you are focused on the short-term end of the borrowing. So borrowings that are less than 1 year. All right. But now these borrowings in the form of a bond are borrowings that can last as long as 10 years. And given the gestation periods of the projects that the monies are going to be used for, this is kind of money you need. You need monies that has very long gestation period. Part of the problem we've had in terms of our monetary
other budget that has existed also can also, will it be also 10 years a budget proposal?
Well, I mean, I'm talking specifically of the bond, of the $2 billion domestic bond.
Okay.
Will typically be more than 1 year. Part of the problem we've had in the past is mismatch of investments and funding. More often than not, you see government going to borrow short-term funding, 1 year money, in order to finance projects that have gestation period of 5 years. That mismatch causes a lot of problems and causes a lot of discussion. But now we are moving in a direction where we are trying to make sure we match funding with projects. So if you are going to do a railway project, for instance, that will probably have a gestation period of between 3 and 5 years, you don't want to go and borrow 1 year money from the money market to finance that. What you want to do is to come to the capital market and actually raise bonds, maybe a 5-year bond that you can use to match, such a project. So for me, deciding to raise this $2 billion domestic bond has numerous advantages, both ones that we can see and those we cannot see. In as much as the funds are applied in a judicious manner, and the projects are actually seen to completion, and the projects, actually start delivering the value that is expected from them. So borrowing, and I must also emphasize the fact that, not too many LDC countries such as Nigeria,
Okay.
and by LDC I mean less developed countries, actually have the capacity and the debt to be able to, provide domestic foreign currency borrowing to their governments, such as we are able to do. You will find out that most countries, their capital market is simply not deep enough for them to be able to do that. So we have an advantage in this country that we have a capital market that is able to provide such funding to government.
Oh, wow. But how does this request right now play out for local investors?
Well, this I will assume, like I'd mentioned, I assume that some of these requests have already been factored into analysis by financial analysts, because these really aren't unexpected borrowing, if you will.
Yes, of course.
It was clear that we are going to have a big budget deficit, and that budget deficit needed to be covered somehow. And I will argue that the easiest way to cover them is via borrowing. If it could be covered, assuming that oil prices were to rise significantly and revenue from oil were to come in beyond what was projected in the budget, then deficit could be covered from revenue from oil. But that is not where what we're seeing right now. As a matter of fact, what we're seeing is a situation where the projected revenue from oil was put at $75 per barrel in the budget, but oil is hovering around $60 per barrel at the moment, which means that, as a matter of fact, the deficit we're talking about could even be much more than 13 trillion at the end of the day. And so if that is the situation, and yet we still have a need to continue to invest in infrastructure, to continue to invest in education and health and agriculture and the likes, then obviously the government will need to borrow to be able to continue to make those investments. And that is why, we're seeing this borrowing happening. So this isn't unexpected. This I will assume that is most analysts have already factored this into their analysis. So I'm not expecting, if there's going to be any impact, as I had mentioned,
because definitely local investors will definitely be worried on all of this borrowing, these fresh borrowings. Local investors will be worried. Even the economists too. People like you, I don't know how worried you are. Looking at the fact that $21.54 billion, 2.19 billion pounds, 15 billion Japanese yen, and the exchange rate of 1 to 1.1381 at the yuan also. So all of this, are you people not worried? Some economists are worried. Are you not worried over high debt servicing rising to 183 trillion naira?
Certainly there's I will say there's cause for concern, and there's cause to be cautious. But you must realize that the focus for most economists and most finance people really isn't the quantum of the borrowing themselves, but the country's ability to actually meet up with its obligation as at when they fall due, in terms of repayment of loans, in terms of repayments of interest. So that is why most economists are looking at financial ratios in order to establish the continuous ability of government to meet with its to meet with its obligations, which is the reason why we have risk rating agencies and the likes of Moody's and Fitch always coming up with ratings, with financial ratings, to let us know our ability. So ratios such as debt to GDP, debt to revenue, are more important to analysts than the sheer quantum of what is being borrowed. So, because for instance, if the debt to GDP, for instance, reaches a certain level, then the red lights will start flashing. And then at that point, you will expect that investors might start panicking. And then, of course, there might be reaction in the market. But if your debt to GDP or debt to revenue, for instance, remains below a particular threshold, then that ensures that you are able to meet your obligation as at when due. Then yes, obviously, in as much as debt is rising, there will always be concern. It is, this involves risk. So clearly there will always be concern, but not necessarily panic. I will put it that way. Not necessarily panic. You will agree with me that most developed countries in the world actually developed on the back of significant debt themselves. But in as much as their economy and their GDP has the capacity to continually meet their obligations, both the short, medium, and the long term, then while there will be concern, there shouldn't be panic.
Nigeria's debt to GDP as at December 2024 is about 52.90. Before then, it was 48.70, and we know probably it's ascending, or probably it's rising. I don't know how that will be sustained. But in all of this, let's open the phone lines so you can be part of this conversation. Lagos, yes. It's about the fresh borrowing from from the president. Fresh borrowing of $21.5 billion, $2.19 billion pounds, and also 15 billion Japanese yen. Well, callers 0705 690 0927, 0705 690 0927, or you can also call the other lines on 0802 502 7711, 0802 502 7711. Don't forget, you can send us a WhatsApp message. You can send us a WhatsApp message on 0705 0705 6900 927, 0705 6900 927. You can also call that studio line. You can also call that line so we can hear from you on this new borrowing. Well, I have a message here. Good morning. It says, on the president of Nigeria, the president should wake up and sit up, because Nigeria is slipping towards something chaotic. Nigerians are going through a whole lot hunger in the land. Every single time I go out, I go to the mall, see some women, young ladies, and asking you for money, ask you to get them bread, or they tell you they are hungry. Mr. President, please be not deceived by your lieutenant, what your lieutenant tell you. Bayo and Co. Nigerians going through pepper. Please do something. Take some walk out and see things for yourself. Well, that's coming from Lan in Lekki. Okay, Lan, we'll get your message. Thank you very much. Please keep your message coming in. I will also have in the house a member of Nigerian Stock Exchange and also the managing director of ASX Management, Olatunde Amolegbe, who's doing justice to the conversation right here this morning. Okay, let's still go ahead in the conversation here. As it is right now, is this what the economy needs at this time? With this fresh borrowing, is this what the economy needs at this time?
Well, I will say that, the truth of the matter is that you need to use what it is you have in order to solve your immediate problem. You will see that part of what was embedded in the letter by the president to the Senate was that this part of this borrowing is needed to stabilize the FX market. Now, you and I know that the FX component of most production and most services in this country is significant. We also know that the inflation, in the inflationary trend we've been seeing in the country in the last few years, has been driven significantly by the depreciation of the naira against the US dollars. It's clear that to hold inflation in check, there's a need to continue to provide stability in the FX market. And I assume that these borrowings in foreign currency, particularly coming into the country, will continue to help to stabilize the FX market. Stabilizing the FX market is so crucial, and because so many other issues are tied to it. The relatively high interest rates we're experiencing is also indirectly tied one way or the other to the FX market. So the inflow of this FX, this critical FX, might help to stabilize that market, and then we could very well start seeing interest rates
in stabilizing the market. Does this apply to the market women on the street, the pepper sellers? They also might be worried, or probably they might be asking, how does this reflect on their market?
It impacts them indirectly. It impacts them because it goes across the entire value chain. I'll give you an example. The pepper seller.
Okay.
The only reason why our pepper is expensive will probably be that the caterpillar that the farmer is using to farm the tomatoes or the potatoes is imported. So that's FX component right there. The fertilizer that the farmers are using is also there. All right. The cost of transport of those goods from the farms to the market, all of that is tied to it. All right. So there's always knock-on effect, against all of these things. So you need to address the fundamentals. When you address the fundamentals, then everybody feels it ultimately. So if you impact FX stability, and you are able to find a way of bringing down interest rates, and then of course you start to invest in infrastructure, such as roads, such as hospitals, such as rails and all of that, then general cost starts coming down. And when cost starts to come down, then it start reflecting in the prices of what we're buying in the market, for instance, and the general cost of living for the citizenry could start gradually reducing. But you need to address the fundamentals in order for people to feel it.
Okay. Okay, thank you very much for that. Well, we have a message. Yes, good morning, crew. Olatunde from Lagos saying, in a sane country, money borrowed is used for development, but your government borrow to state capture wasteful and unnecessary travelings, which has not yielded any result. You put Nigerians in darkness while you want to exempt yourself. It says, well, okay, that is why we are in this nightmare. It's a shame the worst of us is ruling the best of us. Truly, there was a country. Olatunde from Lagos. Okay, thank you very much for that. Mr. Olatunde, the way it is, another $2 billion loan. Nigeria debt is really already looking like it's suffocating Nigerians. Is it not time to fix the leaks, the loopholes, and not keep borrowing?
Well, the issue around usage of borrowed money or usage of revenue is one that will always be a source of concern for Nigerians. And I actually lean towards what the points that your last audience made about ensuring that monies that are borrowed are actually used in a judicious manner, and that they are actually used to achieve the stated objectives for which they were borrowed. That is very critical. That's very critical. All right. If monies are borrowed and they are not applied appropriately, then of course you could end up in a vicious cycle. So I believe that the responsibility of government is to ensure that when these borrowings happen, they are applied such that the impact is felt directly by the citizenry. And I think the more we do that, the more we get value. The more we get value from the borrowings.
But
and then
the loan repayment strategy is becoming alarming and maybe irresponsible, I would say, while also simultaneously repaying all those loans and taking on new debts. We have the servicing existing loans with extremely high rates. This circle, is it not going to harm the nation's economy and probably the well-being of the citizens?
Well, the fact of the matter
taking
is that
new debt, servicing existing loans, all of this circle. How do you react to it? The nation's economy, the reflections on the economy, the citizens.
Okay. Let me make this clear.
Okay.
If you have an existing loan that falls due, you have got to pay the loans that fall due. Otherwise, your credit rating comes down, and you find it very difficult to take further loans, or the cost of borrowing going forward becomes prohibitively high. So you have to ensure that you are able to meet your obligations as at when they fall due. Having said that, also we do realize as a country that part of our problem is the significant deficit in infrastructure. Power for instance is a major issue.
Okay.
We are producing something in the region of 5,000 megawatts of power for a country of 240 million people. Meanwhile, countries with much less people are producing
beyond that.
Producing power in multiples of that. So, and it is clear that we can't possibly achieve the sort of industrialization or production economy that we're eager for without adequate power. Ditto for roads, ditto for hospitals, ditto for schools, and ditto for rail. So it is clear that we need to continually invest in this critical infrastructure if we hope to achieve the kind of industrialization we're hoping for. And without industrialization, then we will continue to have this elevated levels of unemployment that persist in the country. And of course, unemployment comes with poverty. All right. So the need to continue to invest in infrastructure on an aggressive basis is there. Now you are not going to be able to invest in infrastructure only based on the revenue you have at the moment. You are going to have to invest by borrowing against the revenue you are expecting in the future, in the hope that those infrastructure eventually delivers economic value, such that the returns from them, help you to continually pay down your debt. So that really is the logic. All right. Now, if the question as to whether the borrowing we are doing is being used to effectively build up the infrastructure that we need, or the cost of acquiring those infrastructure, how is the cost of acquiring those infrastructure relative to cost in other climes, is a different matter. Is a different discussion that needs to be had, possibly in another climb.
Okay.
But the need to the growth and industrialization of any economy.
Okay, thank you very much.
It makes sense that the government should pursue that.
Thank you very much. Yes, the phone lines is 0705 690 0927. 0705 690 0927 or 0802 502 7711. 0802 502 7711. You can also call the other lines 0802 978 8003. 0802 978 8003. I mean, as it is now, is it not concerning for you, Mr. Olatunde, that the 182.91 trillion naira estimate does not include the trillions of naira in domestic debt? Debts that are likely to be raised over 2025 and 2026 for the financial budget shortfalls. Is it not concerning?
Well, yes, I will reiterate again that,
or it doesn't account for the scheduled debt repayment. Please put more light to that.
Okay, I will reiterate again that any increase or any need to borrow for any responsible government will always be a cause for concern. But that day again, you have got to match your needs with your revenue. All right, I've reiterated that it's clear that there's a need, to spend. In order to even get our people out of poverty, you have to spend. Poverty is not such that you can wish it away. All right, so the need to spend on various programs, is essential to the country. All right, and to get the money to be able to do that spending, if it's not going to come from revenue, then it's going to have to come from debt. All right. Now, I think that part of also some of the issues we tend to also overlook is also the fact that Nigeria relatively is a big country, both in terms of size and in terms of population. And if you look at it over say maybe the last 20 years, if you look at the size of our budget relative to the population of this country, you will see that the significant underinvestments that has been happening, say in the last few decades, is probably what has led us to where we are now in terms of growing population of unemployed youths and increase in poverty in the land. All right, and I'll give you a direct example.
Okay.
Countries of similar size in terms of population with us, say take Indonesia for instance. All right, their annual budget is almost 7 times that of Nigeria. All right. South Africa's population is
let me hold you there, Mr. Olatunde, a bit. Let's quickly go to the phone line. Hello, good morning.
Good morning.
Yes, good morning. What's the name? Where you calling from?
Good morning to your guest. My name is Peter Usifo. I'm calling from Abaranja in Ikoton.
All right, Peter Usifo from Ikoton. Quickly, please.
Yeah, concerning the borrowing, I will only analyze it from the common man point of view. The point is that whether the government borrows or not, we Nigerians will always believe, or many of we Nigerians will always believe, that the government is corrupt and that the government is not doing anything at all, and that they are, very profligate in spending. So that is that. Then, in other way, anyway, we also see that this borrowing may be necessary because our oil revenue is dwindling every day now, just because the global production has been low. Before it was voted that the barrels of oil should be about 2.6 million barrels per day. But now it's less than that. It's about 1.something million. And not only that, the rate of the rate of our dollar, that is, it's supposed to be $75 per barrel has been budgeted, but now it's about $59. You understand? So
Yes,
the
okay.
rate is very low, and that is why they have to go to borrow instead of maybe taxing more Nigerians and other things. But it is said that it's our generation yet unborn that may pay this debt. But I don't see anything wrong in borrowing, in as much as, they provide the good things of life, like projects, good road facilities, infrastructural facilities, like these Lagos Coast, Calabar Coastal Road, and other good structures. In as much as they can provide that, I think we will allow the government to see what they can do instead of blaming them every time. So that is my solution. Thank you.
All right, thank you very, very, very much for this. Yes, keep your call coming in 0705 690 0927. 0705 690 0927. Or call the other lines 0802 0802 502 7711. 0802 502 7711. Please, Mr. Olatunde, go ahead with your submission.
All right. So I'm just trying to harken back to some of the fundamental issues we've gotten wrong in the last few decades. The truth of the matter is that our budgeting have not been as ambitious, relative to our size. And I've made a comparison to a country like Indonesia, similar size, similar demography. Their population is also over 200 million people. And you will notice that their annual budget is like 7 or 8 times that of Nigeria.
All right, let's pick this call. Hello, good morning.
Good morning.
Yes, good morning.
Yeah,
What's the name?
I want to contribute to the discussion.
Please go ahead. What's your name and where are you calling from?
Yeah, my name is Wale.
Wale from where?
From Moe.
All right, Wale from Moe.
Yeah, the government is right to borrow money. But let us see, this money they are borrowing, is it to finance the economy for those who are having company in Nigeria or government projects? If it's to finance the company that they have in Nigeria, they are going to sell this dollar to them and not this foreign currency for development of this company. But if it is for financing government projects, they will not get any hand to it. They are going to sell this dollar, they will make money, and this company will now project. And many things, employment will be there, everything will be there. But if they borrow this money and they are using it to finance government projects, they will still destabilize everything. Let us understand, when we borrow, we know we can grow. The budget was at $60, and our budget was at 75, and revenue they are selling dollar at $60 per barrel. So it is not much. So let us see. Government to borrow to finance projects in Nigeria and sell this project to foreign investment so that they can let this project move in Nigeria and other outstanding firms we have in this country. Thank you.
Okay, thank you very, very much for that. Yes, your call, keep it coming in 0802 978 8003. 0802 978 8003. Your other lines 0705 690 0927. Yes, it says I had a caller saying that, well, borrowing is right. So, hello, good morning.
Good morning.
Yes, good morning. What's the name? Where are you calling from?
Yeah, my name is Gerard from Agor.
Oh, Gerard Agor. Please go ahead, make your comment.
Yeah. In every country that the government goes and borrow money, it used to be very, very difficult for people because they will borrow the money, they will loot it. They will not use it for Nigerians. They will use it for themselves and put all the whole Nigerians into debt. I don't know why a country that cannot be.
And then there is more of borrowing. How does it reflect on the economy? That's also, you can put that, you can answer that probably after you were done with your submission.
Okay. I hope I'm still audible.
Yes, please go ahead.
All right. So to finish my thoughts, what I'm saying is that over the last few decades, we have been underinvesting, by not, budgeting appropriately relative to our size and relative to our population, which is the reason why, we have such a huge infrastructural deficit we have. What needs to happen, and I believe that what government is trying to do, if you've seen the market increase in our budgeting in the last 2 years, is to try to actually start budgeting to reflect the size of this country and the number of people in this country, and also at least bring discipline to the collection of revenues. So it will take time, but I think that if we're effective in our budgeting, then there's a chance that we might be able to solve a lot of the problems we're having. But what I see and what I will continue to project is the fact that we're likely to continue to have a situation where we will continue to have significant budget deficits. And there will always be a need to borrow in order to cover those cover those deficits, until we get to a point where our investments actually start yielding the required results, and then we can be able to close those revenue gaps. The truth of the matter is that this country relies absolutely too much on revenues coming from oil. So whenever there's a problem in the oil markets, we feel it as a country. Our finances, our physical position as a country feels it directly. So you
say it as a deficiency.
Absolutely, it is a deficiency. So there's a need to continue to diversify our revenue source, away from oil. Any country that is having to rely close to 80%, 85% of its foreign revenue on a particular sector, then there has a problem. And if you look at it, in terms of total size, that the oil sector is just a little bit over 10% of the GDP of this country. Which what that says is that we are actually doing much more in the country than oil. All right, but the bulk of the revenue is still coming from that small size, I would say relatively small size of our GDP, which means there are other areas in our economy that we could be producing and could be earning us other revenue. We have banking, we have transportation, we have other. I mean, almost 90% of our GDP are not contributing as much as they should to the revenue, to the external revenue we should be earning. So we need to find a way of ensuring that we activate that larger part of our GDP to be able to contribute to our revenue source. If you look at most developed countries, they are developed because they have multiple sources of revenue coming from different aspects of their economy, such that even if one is affected, you do not feel the impact immediately, because other areas are able to cover for it. So that diversification is one that needs to happen, but it will not happen without investment. And investment means that you have to put in the money now to build out the infrastructure, to encourage people, to educate people, to have a skilled workforce that will ultimately deliver value for you as a country in the medium to long term. And I think that if the government focuses on that, and continue to make the kind of investment that is required in a disciplined manner, continue to make the kind of investment that needs to be made in training and educating a skilled workforce, then we'll have the potential to get to where we're supposed to be as a country, where our potential as a country can get us to.
I can tell you so much conversation in talking about this new borrowing. Okay, we have a message. Yeah, Dele from Surulere says, good morning. It says, the said borrowing loan is also for security. My question is, when Nigeria are being fighting insurgency, what is the rate of their success? They buy Tucano. Tucano is not effective and efficient. Boko Haram, Fulani herdsmen are still killing, abducting innocent citizens. Who they tell us that they didn't know their hideout? We are joking. Pray the loan see the light for the purpose. So that's Dele from Surulere. Okay. We also have this one that says, okay, I need your message. I guess you've read your message, Olamilekon. We've taken a message from you. Yeah, okay. Thank you very much. But we see your messages. Yeah, it's really, really a very long one, and time is on our side. Time is not on our friend this morning on the show. So much conversation on Spotlight and Super FM 92.7. And we'll still have one man who is a member of the Nigerian Stock Exchange and who is also the MD of ASS Management, Olatunde Amolegbe. Before we'll let you go on the show, because quickly we have to, but we can't leave without people saying that, well, it seems this loan, the repayment loan, is being politicized. Do you think so? That the repayment of this loan is being politicized?
Yeah, well, I mean, we're a democracy, so you cannot remove politics from anything we do. There will always be a political angle to it, but it is important. But for me, what is important is for the people, the responsible people in government, to focus on what their plan is, for the country and what they intend to do.
All right.
And actually allow the politics to take care of itself.
All right, but President,
yes, that's the way I say it.
All right.
You cannot say because of politics you do not you do not allow politics to derail you from your plan for the economy.
A lot of people says Tinubu, or let me say President Tinubu paid our Sukuk loan and even others, and then Dele Alake Solid Minerals too made tremendous profit. Why then are we still borrowing?
Because
our IMF loan too. A few weeks ago, it was said that it was being paying it off, and now we're borrowing a staggering $21 billion.
We had to pay the IMF loan because the loan fell due, and the fact that we were able to pay the loan without any force or without any noise. Is really something to give us comfort. I'll make both to say, because you will agree with me that some other countries, particularly in Africa, are having to struggle to pay back their loan. They are having to negotiate with IMF for either an extension.
Is that a thumbs up from you to the government?
Absolutely. To be frank. We know countries that our neighbor here by our side. We know that Ghana, for instance, has had to default on some of their foreign loans.
Okay.
So I mean that we are able to meet our obligations as at when due is something for us to take solace in.
All right. Thank you very much, Mr. Olatunde Amolegbe. We're out of time. We just have to go now on the show. Thank you very much for your time this morning. A member of the Nigerian Stock Exchange, Olatunde Amolegbe. Thank you very much this morning for your time on Spotlight.
Thanks for having me, Michael.
All right, Lagos, this is where we call it a wrap on Spotlight this morning. Join us again for another edition tomorrow at 8. So starting all through from the pages 7:30 down to 9 a.m. Like they say, joy is coming. My name is Michael Inyang.
We don't just talk the talk, we walk the walk. Switch to the good side of life here on 92.7 Super FM.